I'm Glenn Campbell. I call myself a demographic philosopher. I'm looking at life and trying to predict the future through the lens of demography, or the study of human populations. Today I want to talk about the root cause of the current financial collapse, as well as many other collapses throughout history. It centers on a natural human failing known as the tragedy of the commons. That's where individuals pursuing their own self-interest sabotage the resources shared by all of them, thereby hurting themselves in the end. The concept was first described by British economist William Forster Lloyd in 1822, but in the 20th century the world found new ways to express it, leading eventually to our current crisis. I want to emphasize that the current crisis is not COVID-19. I'm speaking to you on April 18th, 2020, and it seems like everyone on the planet is still obsessed with protecting themselves from the virus. I believe this epidemic has already peaked or is close to it because all those lockdowns and social distancing measures have done their job, albeit crudely. The key is not locking people down, but changing human behavior, like how people touch things and how they interact with each other, and these behavior changes are already taking hold. By the end of 2020, I predict COVID-19 will have faded from public consciousness. There will be all sorts of new customs and procedures, like never shaking hands anymore, but the virus won't be interfering with normal activities like it does today. The financial crisis, however, will continue far beyond 2020. All sorts of businesses, industries, and maybe even governments will collapse. Unemployment will remain astronomical, and the economy will only be operating at a fraction of its former capacity. The virus did not cause this economic collapse. It only triggered it. It was the pin that popped the bubble, but it didn't inflate the bubble. By the end of 2019, the bubble was already bulging, waiting for a pin, any pin, to set it off, and it just happened to be this virus. In this episode, I will try to explain how the bubble got inflated to begin with, along with all the other bubbles dating back to the Great Depression. I want to explain the super bubble we had at the end of 2019 and how it got so dangerous. As usual, I'm trying to look at things from the highest possible altitude, like aliens visiting from space. What is there about human nature and human social organization that gave us this crisis? And that's where the tragedy of the commons comes in. This is a fundamental problem of human organization, and I contend that civilization has reached its limits in dealing with it. So the original idea is this. Imagine a medieval village in England. There's a patch of public land called the commons, where every villager is allowed to graze his cattle for free. It's a shared space that everyone uses, but it can support only a certain number of animals. The natural incentive of every villager is to graze as many animals as possible there because it's free. Everyone is thinking, if I don't use the grass, someone else will. But if everyone acts like this, maximizing their own personal gain, the grazing land eventually collapses when there are too many animals there. You need to leave enough grass in place that it can regenerate itself as fast as it is being eaten. Too many cattle mean the land is grazed bare and all the animals end up starving. In other words, all the villagers suffer from the cumulative effect of their own self-interested actions. That's the tragedy of the commons. There's only one solution to the tragedy of the commons, and that's some sort of government regulation. The village council or the lord of the manor has to impose some sort of rules about grazing, like limiting each villager to 2 animals grazed on the commons. A lot of villagers aren't going to like this, and the council may have to get harsh, imposing fines or other penalties on those who violate the rules. But these rules are essential for maintaining the common good. Without regulation, that is, with unfettered capitalism, the land is overgrazed and everyone starves. The same would apply to a fishery like a lake. If too many fishermen pull too many fish from the lake, the fish population collapses and soon there are no fish for anyone. Every fisherman is hungry and trying to feed his family, so he is incentivized on any given day to pull as many fish as he can from the lake. But if too many fishermen do that, there will be no fish for anyone. The only solution is for some government authority to somehow license fishermen and count their catch. It may seem horribly intrusive, And regulation itself can be corrupt and inequitable, but some sort of regulation is unavoidable to save the fishery. A third example, which is a little bit more indirect, is a paper factory on a river. The factory itself has no economic incentive to avoid polluting the river because any pollution it puts in the river is experienced only by the people downstream, not by the factory itself. In this case, the common resource is the river, which many people depend on for their livelihood, but the factory has no economic incentive to keep clean. The only way the factory is going to clean up its act is by some powerful government authority forcing it to do so. Most countries have been successful in imposing these kind of basic environmental regulations. There were times in the past of horrendous pollution, but today most common land isn't overgrazed and most fisheries aren't depleted and most rivers aren't polluted because sensible government regulation has stepped in to protect these common resources. Throughout the developed world, simple real-time pollution has been pretty well controlled, but global warming has not been. That's because climate change is a problem arising over decades, even centuries, and once humanity understood what was happening and started taking action, it was already too late to stop it. Climate change is different from pollution. If a river is polluted and you cut off the source of the pollution, the river starts recovering almost immediately. That's not true with climate change. If you could cut off all carbon emissions today, sea levels would continue to rise for decades, if not for centuries. Humanity has been spewing carbon into the atmosphere in earth-changing amounts since at least the Industrial Revolution. You can't make it all go away just by stopping the emissions now. Global warming is the sort of long-horizon problem that humans aren't capable of handling, in part because the timescale of the problem exceeds the human lifespan. It also exceeds the term of any elected politician. Politicians have no incentive to solve any invisible long-term problem because it doesn't produce instant results and it doesn't get them reelected. Humans are now reacting to climate change after it has become unstoppable because they were politically and scientifically incapable of preventing it decades ago. Modern financial systems are similarly uncontrollable. This is a complex kind of commons involving invisible resources leveraged over time. On the traditional commons, the resource is obvious. It's grass, and you can judge its health by looking at it. In the financial world, resources aren't so obvious. If a company produces X amount of profit each year, then stock, debt, and derivatives can be sold based on that profit, and all these instruments become very complex. The company's profit is the equivalent of the grass that's being grown in the commons every year, but financial technology allows the sale of future production or future grass, and that's where things get messy. In medieval times, it was just cattle and grass, and it was pretty easy to tell by looking at the land when the cows had eaten too much. In the 20th century, we invented something called debt, which essentially allows villagers to sell their grazing rights far into the future. And that's much more difficult to regulate than real-time grazing. On the commons, the core production is grass. Instead of grazing animals there, you could harvest the grass and form it into bales and then allocate a certain number of bales to each villager. There's a certain number of bales that the land can sustainably produce each year, and each villager gets his share. But imagine now that some clever financial guru comes along and offers villagers the ability to buy and sell their future allotment of bales. If you don't have the cash right now to buy something you want, like a new wagon, you can pledge to the seller your future hay bales for the next 10 or 20 years. That's basically what debt is. You're selling your future or your future rights to something. You get the payoff up front, which is the wagon that you can use right now, but in some way you are losing your freedom in the future. In this village, bales of hay are a sort of currency. Once each villager receives his annual allotment, villagers can trade these bales back and forth with each other in exchange for goods and services. This is an honest monetary system because you know what each bale is worth. You can use it for trade or you can use it to feed your animals, which in turn results in milk or meat or other things that you can eat. Bales of hay are the gold standard in this village, and the currency is stable. Things get messy when villagers start dealing in future bales of hay. When a villager deals with future hay, he doesn't have the hay in his hands, so he can only offer a piece of paper promising to pay a certain number of bales on a certain future date. Now people start trading these pieces of paper as though they were actual bales, and this is where things get dangerous. Pieces of paper with promises written on them do not have the same value as actual bales, because there are so many variables behind them and so many things that can go wrong. Will the person who promised the bales actually deliver them? Will grass production in future years be the same as it is today? What if there's a drought? What if there's a fire that destroys the commons? I mean, there's so many uncertainties with these pieces of paper that they can't really be worth the same as actual bales. What invariably happens in these secondary markets, without regulation, is that they become oversold. In other words, more pieces of paper are in circulation than actual future grass production can support. Things turn into a crisis when there's a drought or fire. Grass production falls, but the pieces of paper and the promises they bear are still outstanding. Eventually, if you get way more paper than grass production, there's a crisis when the value of those pieces of paper crashes. And paper is what our current economy is all about. It's not just an exchange of current production, grass for services. There's a huge secondary market in the promises of future production. And that's what a stock market is, or a commodities market, or a bond market. It's essentially a market in future production and in future profits. These secondary markets have a tendency to become overheated, circulating more promises than actual production can support, or at best, trading 100% of future production with no margin for error. Things turn into a crisis when production unexpectedly falls, as it's doing around the world today, and all those outstanding promises face a reckoning. Government authorities, like the village council, can handle the basic tragedy of the commons. They can prevent overgrazing of the land this year, but they are helpless and inept when trying to regulate a secondary market where people pledge their resources 10 or 20 years in the future. The markets and instruments of future trade are constantly evolving, so no one really has a handle on what's going on. Some people are getting rich on these grazing futures, which encourages many others to get into the market, pushing the prices up and eventually generating a bubble. A bubble is when more paper promises are being bought and sold than production can actually support. That's where we were in 2019. The bursting of the bubble is when the prices of these paper promises fall to a sustainable level, consistent with actual production. This sounds like a simple process. The bubble bursts and prices fall, but there can be all sorts of complex systems built upon the assumption of higher prices, and these systems don't fall gracefully. Companies go bankrupt, institutions fail, and a lot of people lose their jobs. At worst, you get to the point where the government itself can't function. So speaking of government, I want to go back to my favorite example, U.S. government debt. The basic production of the U.S. government, at least before the virus, was $3.5 trillion per year. That's how much money the federal government collected in taxes in 2019. This is the equivalent of the grass that grows on the commons every year, which is fairly stable. You can try to raise or lower taxes, but this affects production and may not change total tax income. It's hard to truly make more money from taxes unless you're in the middle of an extended economic boom and you tax wisely. Given all the people who are out of work right now, it seems unlikely the government will attain the same $3.5 trillion income in 2020 or the following years. $3.5 trillion can be considered the federal government's peak tax production, like the maximum bales of hay the commons can produce. In 2019, before the virus, the U.S. government spent about $4.5 trillion on all of its programs. In other words, $1 trillion more than was being produced in taxes. So where does the other $1 trillion come from? Well, the government sells pieces of paper promising to pay $1 trillion in the future. These pieces of paper are sold to the public and passed around among investors as though they were cash, but they're not. Lots of things could happen before the paper is paid off. The government could default, or inflation could eat away at the value of the principal before the paper matures. In 2020, with all the federal government's rescue spending, how much will the budget be? 6 trillion? 8 trillion? Your guess is as good as mine, but the income of the government can't be more than 3.5 trillion, and it will probably be a lot less given all the business closures. So the government will probably be borrowing something like half the money it spends in 2020. It's going to be selling a lot of paper promises. Total bonds in circulation was about 22 or 23 trillion before the virus, which is a lot of money if you're only making 3.5 trillion a year and are routinely spending more than that every year. Very quickly, in a couple of years, it could be 30 trillion and rise exponentially from there. This is a clear, unequivocal case of there being more debt outstanding than can possibly be repaid. And this market is completely unregulated because it's the government selling the paper and the government can do whatever it wants. The only thing that will stop the endless production of paper is investors looking at it and having an aha moment. Insight will come to their faces and they'll suddenly say, I'm never going to get paid for the full value of these promises. It's like a market for future hay. Investors hold pieces of paper promising so much hay in the future, but if you add up all the paper owned by all the investors, you realize it is way more than the commons can actually produce. At some point, the market for all this paper has to crash to the point where the future promise for one bale fetches only a fraction of the price of an actual bale in hand. At that point, the market is realizing that this paper is junk. With all this rampant paper issuing, at some point the government bond market has to collapse. I can't tell you exactly when because it depends on the appetite for the bonds in the open market. Right now, investors are buying government bonds at whatever rate the government issues them, but at some point there's a saturation where all the needs are fulfilled. I can't tell you when it will happen, but I can tell you generally what will happen. Either the government will default on its bonds, not paying them upon maturity or paying less than the face value, or inflation will degrade the value of the bonds. Either option is bad for investors and bad for the government itself, since it will now be unable to incur new debts at an affordable interest rate. The end game for all of this is either the government collapses altogether, or it has to live within the bounds of the taxes it actually collects. Given the economic collapse, this is certain to be a lot less than the 3.5 trillion peak in 2019. You have to imagine a government that is only a shadow of its former self, hardly capable of maintaining basic services. Mail doesn't get delivered and roads don't get repaired, and these infrastructure problems become a further burden on the economy. And government debt is only one bubble of many. With U.S. debt, all the variables are open and known. Financial markets are riddled with all sorts of other schemes that are far more difficult to assess. Think of the mortgage-backed securities that brought down the economy in 2008. Only a few smart investors, those big short people, predicted what would happen and were able to profit from it. Everyone else went down. Now, some of these problems may have been repaired since then with new regulations, but there are plenty of other schemes that have arisen to take their place. And they're all going to see a reckoning. And I don't mean at some vague time in the future. I mean a reckoning this year in 2020. As bad as things now seem in April, I think they're going to get far worse. It's hard to say that any of this could have been prevented. In theory, the government can regulate financial markets. But frankly, the government can't even regulate itself, as shown by its own debt bubble. The government is run by politicians who have no incentive to plan for the distant future. They can only plan for the next election, which generally involves giving voters free stuff and not causing them any pain. Cutting $1 trillion from the budget was impossible in 2019 in outwardly good times. In the worst of times, like now, politicians are committed to rescuing everyone regardless of the cost. In other words, they are solving the tragedy of the commons by issuing still more empty promises on future grass production. Once again, as this crisis unfolds, we're trying to solve the problems of today by borrowing from tomorrow. And the sums being borrowed just get bigger and bigger. They are starting to rise almost exponentially. By the end of 2020 or 2021, we'll be looking back fondly on 2019 when the deficit was only $1 trillion and total debt was only $22 trillion. The curve is going to go way up from here. And things aren't any healthier in the private sector. Debts have been building upon debts, fueled in part by artificially low interest rates for the past decade. All that cheap money was not put to work building the economy, but was spent on all sorts of financial shenanigans that will become more obvious as these schemes collapse. One of these dubious schemes was the stock buyback. That's when a corporation borrows money at ridiculously low rates to buy its own stock. This makes the stock price go up and stockholders are happy. Executives are also happy since they are compensated based on the stock price. The only problem is that the company is now saddled with huge debt, making it vulnerable in a downturn like our current one. Let's say the company borrows $1 million to buy its own stock at the pre-crash price of $200 a share. After the virus messes up the markets, the stock price might fall to $100, but the company is still committed to all that debt it incurred buying stock at $200. You can see that it's going to be a mess. In 2020, a lot of corporate debt is going to be downgraded, which is going to contribute to a flood of bankruptcies and still more job losses. Corporate executives, like politicians, are not hired for long-term performance across decades. They are hired and rewarded for short-term gain. If this means stealing from the company's own future, these executives will do it because there's a good chance they won't be around when the bills come due. Executives borrow on the company credit card to prop up the stock price, which also benefits them personally. When everything tanks, they get booted, but they've already made their profit. The people left holding the bag are employees who lose their jobs and ordinary stockholders who lose their money. I can't possibly describe all the other crazy debt schemes out there, but almost all of them have a common theme. They are selling out the future for a quick buck today. They are selling more grass from the future commons than the land can possibly support. It's a little easier to look at things from a global perspective. According to the Institute for International Finance, global debt in late 2019, that is, before the virus, was 320% of global GDP. In other words, the world was producing goods and services worth about $80 trillion, while global debt was about $260 trillion. That's not just government debt, but debt from all sources, consumer debt and corporate debt and maybe your local neighborhood loan shark. In my mind, it's probably an undercount because some debt is so informal, like the loan shark, that it's hard to estimate. But let's assume that the IIF numbers are correct. Total world debt in 2020 probably isn't any less than $260 trillion, but global GDP has taken a huge hit from the coronavirus. How much of a hit? We can only guess. Maybe world GDP is down to $60 trillion in 2020, but the debt doesn't magically diminish because the economy shrinks. It's still there at $260 trillion, but with our new lower GDP estimate, the world would now owe about 430% of GDP by the end of 2020. Now, this is an utterly unpayable amount. It's a promise of future grass that can never possibly be realized. Most of that debt has to fail sooner or later, and I'm betting on sooner. You may think that the answer to all of this is better government regulation, but you're trying to regulate a bunch of moving targets that no one really understands because they're just so new and unpredictable. Even if you did have a politician or business leader who is secure enough to think about the world 10 or 20 years from now, it's hard for them to know what to do. Debt is this new technology like computers and software. This technology is rapidly evolving and no regulator can possibly keep up. If you successfully regulate one debt product like mortgages, then a dozen other products emerge, often skirting regulations on the first product. I find it truly doubtful that even an earnest, far-sighted government like Norway could effectively regulate all the new financial instruments coming online. If Norway successfully did regulate a certain financial product, those operations would just shift overseas where Norway has no control. If regulation isn't lax enough in your own country, you can just move your operations to a country that is more lenient. Big corporations are good at this, bouncing operations and profits around the world to minimize taxes or regulations. No government is sophisticated enough to keep up with it all, and governments are so at odds with each other that they can't coordinate their responses. So the bottom line is the financial world is doomed. It may have hit a sort of wall where no further economic progress is possible. Maybe the boom and bust cycle ends with one massive, long-lasting crash, a new Great Depression, which is probably starting right around now. If there's more debt in the world than production, maybe 2020 is the year that all the reckonings happen at once. What ultimately has to happen is all the paper promises out there have to be devalued. All of a sudden, government bonds crash, corporate bonds crash, stocks crash, real estate crashes. Everything that can crash does, and the world is pushed back into some kind of feudal state where people are fighting over basic resources. Astronomers often wonder about Fermi's paradox. With so many billions of stars visible to us, many of them with planets, and a fair chance of life on many of those planets, why have we detected no alien civilizations? The answer may be that as society becomes more technologically advanced, it eventually collapses under the weight of its own complexity. Maybe the collapse always happens at the stage we're now in, just before we're capable of expanding beyond our planet. And that would explain why we don't see any aliens out there. So now we're in crisis, both the coronavirus thing and the financial crash, and virtually every remedy available to governments involves going even deeper into debt. To fund recovery efforts, governments issue bonds to the public, and when the appetite for those bonds is satiated, they are forced into some form of money printing. That's essentially what the U.S. government is doing now. As of today, the Federal Reserve is printing money roughly twice as fast as the government is issuing new bonds. So it isn't just funding the deficit, it's trying to fund the whole failing economy. Money printing goes by other names like quantitative easing and asset purchases, but the effect is the same. You're increasing the overall money supply. Consumer inflation, where the price of beans and eggs and bread goes way up, hasn't really started yet, but it will. The Fed has opened up the tap of money printing, and it's filling up a reservoir, which is the huge appetite around the world for US dollars. Since other countries are even in worse shape than the dollar, foreign investors want dollars to put in their mattresses as fast as the Fed can print them. But there's a limit. There always is. Once the appetite for dollars is satiated, the reservoir overflows. Suddenly there are more dollars than the market wants, and the value of each dollar plummets, and we've got serious inflation. It's hard to say when this tipping point will happen because it's hard to estimate how much appetite there is out there for dollars. But I'm guessing that the reservoir will overflow by the end of 2020. In other words, we're going to see significant inflation. So the US dollar itself is a sort of commons, a sort of shared resource. Everyone depends on the dollar for trade, but it only has value if it is a relatively rare commodity. If you print too much money, you degrade the value of the dollar. It's like grazing too many sheep on the commons. Eventually the whole resource collapses and people are left holding dollars that are constantly falling in value. The government is degrading the monetary commons to try to save the village, but eventually the commons have taken too much abuse, the resource collapses, and the whole village suffers. It's an unstoppable process, and it's easy to imagine it happening in every advanced culture everywhere in the galaxy. They develop new technologies, almost achieving star travel, and then the complexities of the technology eat them alive. It could happen with atomic power, ending the planet in some kind of devastating war, or it could happen with something as seemingly non-lethal as debt. The more connected people are and the more clever they become in selling their future production, the more things there are to go wrong. In the end, I don't think humanity will ever achieve meaningful space travel. Not because the technology is impossible, but the financial underpinnings have collapsed. Humanity will never get to the stars because it has hit its complexity limit, the point where the cost of technology exceeds its benefits. Fermi's paradox may not be a paradox at all. It may just mean there are limits to technology and to financial systems where they become uncontrollable. The complexity of civilization and technology exceeds the abilities of the tiny brains that created it.